everyone. Hello, Warriors. So, our Cyber Monday deal, we said 24 hours. When we say 24 hours, we mean it. So it's still good. We'll disappear an hour after the webinar. So just give me a why that you understand that. Because then I'll get emails. The team will get emails. Well, you know, I didn't know it was going to end. You can't hear me? Really, Kevin? How about the rest of you guys?
Hey, Dale.
You guys hear me?
Dale, good morning.
Good morning, Steve.
You sound a little bit far. I think it's from whatever happened yesterday at the middle of the webinar.
Yeah, you know, yesterday they asked me to change the hardware on my audio, so I'm not sure what to do.
Do you use a headset?
No, I use a microphone. But it asked me to do something with the hardware. I'm not
okay,
sure.
now we can hear you. We can hear you much better now. I'll help you troubleshoot.
You can hear me better now?
A lot.
A lot better?
Yes.
Okay, I'm closer to the mic. All right. So everyone, Cyber Monday will go until an hour after the webinar finishes today. Okay, good guys. I hope everyone's doing okay. I know Blake doesn't like the terminology turnaround Tuesday, but I just want to show a few things that you may want to think about, put on your radar screen. Start with the Russell, and Steve was very right about this pullback in the Russell, that it was corrective, not impulsive, and look at this. It was also a confirmed high. Now we've made new highs in the Russell, so we could now really have a megaphone. And if you see that glaring divergence, this could be drive 2 right here. Okay, so there's your megaphone. Well, there was your megaphone. Okay, anyway, something like this. Magnet. Something like this. So potentially we get one pullback here. This is drive 2, diverging. I don't know why this keeps happening to me. Perhaps we get drive 2, we pull back to 48 or so, and then drive one more time. So there could be a pullback going on here in some of the indexes. And here's a couple of things that I was talking about yesterday and late last week was the Euro Aussie. Right here it's putting in a down day. I know Steve wants more confirmation. This is your daily chart. So we are diverging on the daily with the view that we have in Aussie possibly bottoming. This could end up being a decent trade. As you can see, maybe they'll give us another run at 58 or so, but looking heavy, and also the EuroCAD. So EuroCAD's looking even heavier. We had this spike up here yesterday. Okay. Everyone see that? So a couple of ideas there. The majors. I was expecting Euro Pound to go up, so therefore, like I said yesterday, the pound is your preferred short. Check this out. All right, so we're back under that breakout line, and showed the daily that it could have just been a false breakout. Got all the stops here, cleaned out all the bears. Pretty negative looking session in cable, and cable looking weaker. So if we're going to get this rally in Euro Pound here, which I still think it's possible, it may not be just Euro strength. It could be cable weakness. So maybe we get some kind of Brexit scare. But the pound is looking heavy to me. Blake came up with a pattern in play on the pound, so you're in there. It's a great trade. Blake was looking for a pop in the yen. That's starting to happen. So some nice ideas. What do you think? Some people short the pound here. And Luca, what do you think of EG? JT Quadrino, nice to meet you. Yes, I believe there is JT. We could look at it again. The 4-hour time frame, we had it early on Euro Aussie. I was just waiting for the 1 hour to line up. But the 4-hour, we definitely had. That's your daily. I'm having all kinds of trouble here today. Huh? There it is. So this looks like 1, 2, 3. Okay. See this? Here's drive 1. They're a little stretched out, but it was a nice divergence here. I was talking about it down here that I wanted to see one more high on the 4-hour. So yeah, we're diverging there. We weren't on the 1 hour when I first posted that on Twitter. We were still making some new highs here. And it was over 80. So my preferred shorts are under 70 for RSI. And that's not happening on the 1 hour. It is happening on the 4. Does that help? Usually I use moving averages or fib retracements. If it's a wedge, I have a wedge line. Euro yen, I still think still has the possibility of breaking down. Right, it's up a little bit today. But yesterday I talked about on the euro yen, first we failed from 78.6, right? Right here last week and then this week. So momentum is getting weaker and weaker, all right? This was a very strong rally, 78.6, there's 61.8. So I would think if it came back down here that we're not going to get, you know, people would say, well, what's the next in the progression? Would it be, we went 78.6, 61.8, would it be 50% retracement from down here? I think that either we have a no retracement and it just goes, or it's going to be weak, like 23 or 38. Okay, so to me, this still looks negative. I have no reason to want to get long here. I really don't like flat bottoms. They're not the kind of bottoms I like, and really if you want to be bearish, you take it from here to here. And Long talked about targets by the team, 29, 28. I think it's still viable. A 5 drive. Okay, does that help you, Midris? We have a great interview today. Another market veteran. His Twitter handle is at Warburg100. So unless you're an old timer, you don't know, Warburg Pincus was one of the pioneer Wall Street banksters in the old days. And Fabrizio's from Italy. He's been around a while. We'll have some more stories. And his analysis is quant. He's going to be talking gold, the dollar, and treasuries. So stick around for that interview. He also does some television in Italy. If you're in Italy, maybe you know him. Okay, so with all that banter, good hunting on this Turnaround Tuesday. If you haven't signed up yet, you have an hour or so left to do it to get a free month. And with all that being said, I'm going to pass it to my trading warrior brother, Steve Volge. Good hunting today, guys. Hi, Steve.
Hey, Dale.
Are you ready?
Oh, yes.
So we couldn't get Velo to say anything because he's too shy.
Exactly.
Okay.
Everything else is an excuse. He's just too shy.
Me too, man. I
Yeah,
try
yeah,
and
I
get
know.
I
You're the
try and get
strongest
over
of
it
all.
every day, but I'm pretty shot.
Yeah, yeah.
All right. So what do you think of Euro yen? You think maybe this time we get down there, we crack it again, Steve, or do you see anything to change the picture there? And now, before you were calling the Russell a megaphone, but now that we've had a new high, now it really is a megaphone. We only had one part of the megaphone before. Now we have the upper band of it as well. So as you can see, I remember everything you say.
You do, you do. You have the memory of an elephant. I've told you in the past.
And the waistline. No.
Nah.
Yeah. All right. So you need me to pass you the screen, bro?
Sure. I can actually take it myself. Don't worry about it.
Okay. You're a little bit soft.
I know. I mean,
Okay.
I can see that.
Okay.
Although there is not much I can do. It's sometimes the software decides to auto-adjust the microphone volume, and usually it fixes itself
Okay.
after a few seconds.
So it's still an either or for you. But let me tell you, let me ask you this. You see that what I went over is that last bounce was 78.6 back. This one was 61.8 back. Is there a market message in that each rally is retracing less and less?
Might be. This is one of the elements I'm looking at here. Indeed, that it has taken some time for us to go back at the top of the range, but still that's not like a very strong signal. You know what I mean?
Yeah.
What is the fact remains that we have already spent 2.5 months oscillating in this range, and when something is oscillating in such a range for 2.5 months, you know, to me it's like dead. I don't care. You know what I mean? I do monitor, because when it breaks out, I am going to care, because when something, it's like a coil. If you compress a coil, you know, the more you compress it, the higher the chances that, of course, when you release it, although to be honest, if we're talking about a coil, it's purely physics, it's going to do that. You know, the higher the chances that once you release it, you're going to see, you know, quite a reaction. And that's what I would be expecting from the euro yen to do here. Now, is it going to be to the downside? Is it going to be to the upside? You know, I'm not a magician to know. But regardless, I think that any break is going to produce a significant follow-through. Especially to the downside, there is absolutely nobody that can question the validity or the market importance of this support area. It has been now tested a numerous number of times. So obviously, when we actually manage to close below it, it's going to be a significant event to talk about.
I think it's very interesting, almost to the pip, how it's going to these different fib levels, 78.6, 61.8. So don't tell me fibs don't work. And I don't know, it's kind of, to me, suggests that this rally's weaker than the last one, and the one before actually made a new high, and then the next one 78.6, this one 61.8. You know, people might buy it down there looking for at least another retracement, you know, and maybe we don't get any retracement and we just break down. So just you know, intuition.
Perhaps. But as I said, after 2.5 months, the most important thing to do is just monitor the breakout, and you know, this is an excellent candidate to play out, you know, a breakout strategy. Okay. Now there is another thing I wanted to show. It's the USD CAD, and the reason I want to show the USD CAD is that at the very beginning, when we started correcting lower, as always, you don't know exactly what to expect. But now that we've had more days of price action, we can quite comfortably interpret this as a triangle, right? And being what it is, a triangle, especially if we confirm like a daily close above the previous high, let's call it roughly 128.30.
130, 131, that's stop.
No? Yeah, I think that opens then the possibility.
And that would be back against the Feb lows. Yeah.
Yeah, something like that. So it looks now to me, and I know that a lot of people are tracking it, that's why I wanted to mention it today. It looks likely to me that we might get one more push higher to the USD CAD before we actually move lower. Of course, you know, there is absolutely no guarantee because as always, a correction is a correction, and you know, this can evolve to something else or something different. But from what it looks like at the moment, the triangle's interpretation is, you know, quite a possible one. Regardless, there is no question that this is a consolidation phase of the market. In my opinion, there is also no question that this move lower was impulsive and that the move higher is going to end up being corrective. But that does not mean, as I said, that it might not have one more leg higher. So at the moment, for me, one more leg higher to this correction looks like a quite good possibility. I would be looking, if that plays out, I would be looking to be short the USD CAD at a little bit higher levels. Okay. The USD NOK looked to me like a more complete structure. You never know, it might hold one more high as well. Personally, I doubt it. I'm still short the half of the position that I didn't take profits to, and I'm going to keep it because my entry was like I almost top ticked that one because it actually, you know, came perfectly and tested the confluence that we had been monitoring. So I'm going to be keeping the other half. I'm quite comfortable with it, but still, even if that manages to yield another high, I wouldn't be looking past 840. Okay, so having to do with the USD NOK, 840 is the level that I would be looking for if we end up having another high. Personally, I kind of doubt it. And we might see some divergence like that. I mean, it's not impossible. We often see, and that usually also indicates turns in a market, like two very correlated markets, one of them posting a new high, one of them don't. In this case, that could be the USD CAD and the USD NOK. And that then signaling that, you know, that was the end of the run for the USD CAD as well. Now, having to do with cable, as you mentioned, Blake top ticked it yesterday. He actually put a pattern in play as well for that. Does that mean that that's it and the cable is turning bearish? According to my view, no, not yet, because simply I would like to see this area, 132.50, breaking lower for me to gain more confidence in this view. Simply because if I see a reaction from there, I could easily see this as you know, a break, retest, and move higher kind of situation. So Blake put an excellent trade there, but for me to gain more confidence that it has more downside, I really want to see like a daily close below 132.50, 132.30 even better. Other than that, as he has said many times and we have shown many times, the cable remains in a large triangle. So, you know, no matter what we do in it, in the medium to long term, plays very little role from a technical perspective. So now we're talking about the short-term trades here because the long-term trade is going to present itself once we get a breakout of either this trend line up there or this one down here. Okay.
But all the way up, you said it looked corrective. The break was impulsive. Does the recovery, even though we got over that triangle, still have look corrective in nature?
It definitely doesn't look impulsive yet.
It doesn't.
I can tell you that much.
Okay.
No, it doesn't.
Okay.
So, you know, if we see now a retest here and an acceleration higher, then we can be talking about something different. But until then, no, I see nothing impulsive yet here. Okay, let's now go to the fiber, to the Euro USD. Okay, I can tell you that much. We talked about yesterday the possibility of, you know, a little correction lower towards the 118.50. I see nothing different here. I have no reason to treat yesterday's and today's price action as like somehow I cannot view this move higher simply as a correction to a move lower and be looking for another move lower, because the broader trend since the beginning of the year was higher. So the smart thing to do is view this move higher as the trend for now, this move lower as the correction, and this the beginning of another move higher. So obviously, especially as long as the 118.50 level holds, I have zero reasons to be bearish the Euro USD. This is also one of the reasons that I'm not very enthusiastic about the Euro USD. Sorry, the Euro Yen, because yes, we have been looking for weakness in the USD Yen, so for strength in the Yen. It has manifested very nicely so far, and I do believe that it might yield more weakness. But on the other hand, there is nothing bearish with the Euro USD. So as I've said plenty of times in the past, in general, I don't like to be short or long a strong against a strong currency or a weak against a weak currency, right? So at the moment, what we know is that the yen has been strengthening during the past several days. The euro has been strengthening during the past several days, and in general, it has showed that this is a year of strength for it. So being short the euro yen, I'd rather pick something else. Okay. Let's have a look at the Aussie. First of all, we have a question about the Aussie, but second of all, I wanted to begin from the Aussie because I want to show the Aussie yen as well, because it's at a very interesting juncture. Let me say the following. The Aussie has the potential of some kind of a recovery from here because it completed the structure I had in mind. But on the other hand, unless it clears this descending channel, there is nothing to talk about. It's not only the descending channel, actually, it's also the 76.40 level. So I'm going to be a believer that at least like a larger correction in the Aussie USD might start unfolding, but unless I see a daily close above 0.7640, I'm not even going to discuss this possibility further. It is there, I can see it, but I want to see a daily close above that level and that area, for me to go into discussions. Obviously, I don't need to say that we were looking for 77.30 to be resistance in this little correction there, and that's the first level I would be looking to provide resistance once we break above 76.40 if that happens. Okay, so not much to talk about the Aussie USD until then. Now, having to do with the Kiwi, it's more than obvious that the Kiwi is stronger, which is also, I'm jumping from pair to pair, but I don't want to forget to mention this. This is one of the better setups that we had out there. I had actually done analysis on that on ForexAnalytix, and I had written about it. I believe that the Aussie Kiwi had another leg lower when we saw this kind of price action after this move that we had. So if you see, the price action was screaming that it was corrective and that it was a bear flag. I had drawn that actually before we broke lower. And I think that yesterday's price action confirms that, in the most emphatic way. And actually, since we're here, although I don't really care about the target, but it might confluence because I care more about horizontal support resistance areas. So for me, the next area to be looking for is the 1085, and I'm going to go back to the Kiwi as I promised. I'm not forgetting. But let's measure a target here and see perhaps they confluence. So let's see what we can expect. Yeah, more or less they actually do. There we are. So yeah, we have something similar from this flag formation. It targets actually the same area, so it's actually a confluence. So the 1085 area, I really believe in the Aussie Kiwi is going to act like a magnet. Also, if you see, the 200 DMA is just below it and converging to it as well. So we might be talking more or less about a triple confluence by then. So I think this is a very good this was a very good trade, and probably the reward to risk ratio remains there. Now let's go to the Kiwi. The Kiwi has been recovering in a much better fashion. We initially had this RSI divergence pointing to it. We also had that false break lower because this was like a retest. We had a retest of that low, we rebounded, and then we finally looked like we're breaking lower, but that break lower only lasted for a couple of days, and now we are retesting this broken channel support as resistance. The next area of interest is the 6970 area. If we break above that, I would be looking for the 7060 area. Keep in mind that I'm not looking to be long these pairs because I have no reason to believe that these moves higher are going to be anything more than a little bit less shallow corrections than we've had in the recent past. Okay, so I'm rather looking to be selling these moves if I get the right opportunity than the opposite. Okay, let me go through some of the questions, and whoever needs something. Okay, I already see questions about the Euro Aussie and the Euro Kiwi. I'm afraid I can't offer much insight in them in the sense that we looked at them yesterday. Of course, you might have not been here yesterday, just saying if you were here yesterday. I don't have anything much more to offer simply because, as I've said, the Euro Aussie has reached a 161.8 extension, almost did. So that can definitely be a very good area to see some kind of a pullback. But on the other hand, you know, the sequence of higher lows, which defines an uptrend, has not been broken in a long time. So keep in mind that if you want to be short against the highs, you have an excellent reward to risk ratio, but statistically speaking, a low probability trade. As far as you're aware, as far as you're okay with that, as far as you acknowledge that and you're okay with that, it's absolutely fine. Same thing applies to the Euro Kiwi, although I have to admit that it looks quite better. In what sense? That first of all, we have the channel that has created this. This was the second rejection in a row, but we also have a range that you can be monitoring, this one. So in essence, a break below this range can trigger an extension to at least retest this area once again. So I would have to say that besides the fact that, you know, we're still talking about counter trend trades, keep in mind that between the two of them, unquestionably, and my view on the Aussie Kiwi shows that as well, the best pair to be short at is the Euro Kiwi. And technically, it's cleaner as well. Okay, so, you know the area, we're currently testing it once again. It's roughly, let's call it 171.20. I think a break below there is going to produce some more downside. Still in the confounds of an uptrend, right? Don't forget that. Check out oil, definitely. By the way, we also have RSI divergence in the Euro Kiwi. Oil, let's have a look at oil. Roughly the 127.2 extension of this move lower is creating some reaction from there. We also have RSI divergence. There is no question that it has been overbought, but on the other hand, as long as we remain above 55, you know, crude remains bullish. End of story. So can this pullback like extend more? Yeah, sure it can. But you know, am I bearish oil? No, I wasn't bearish oil since even the correction. We called actually the end of the correction due to a very nice confluence we had. And if you look at the move higher, it was still it was initially confined in a channel, and it actually accelerated and broke above it, came back, retested it, retested these highs as well. In essence, there's nothing bearish with oil in the medium term. Now, in the short term, of course, we will always be getting pullbacks. Copper. Another question about the copper. Let's have a look at it. Okay, what is troubling with copper is the fact that it didn't actually break to new highs after giving us what looked like a very nicely and well-behaved correction. So we got a rejection from there, and I think that keeps copper in a quite choppy environment. I cannot turn bearish yet. There's no question about it, because still the series of higher highs and higher lows has not been broken. But I would say that I wouldn't be long either. So I think that there's no trade at the moment here in copper. Okay, if I was forced to be something, it would probably be long, but that's why I don't like to force myself into trades, simply because, as I said, in my opinion, there is no trade here in copper at the moment. We're still near the highs, though. Don't forget that. AussieCAD, okay, that's a pair I haven't checked in quite some time, I have to tell you, but I have absolutely no problem. I can tell you two things about AussieCAD. One is that it held a very, very, very important support area. It's this ascending trend line. As you see, I haven't checked in a very long time. This trend line was already there, actually, because I was monitoring for possible levels of support. So we had that low there and that ascending trend line, which actually did the work for now. But on the other hand, it's what I told you before. We can still only view lower highs in this chart. So for anything technical to happen that can, make me consider the possibility of a move, of a strong move higher, would be to see finally a higher high, which we haven't done in a long time. I know that somebody, I can give you help if you're looking for a bullish interpretation. Somebody can view this also as a descending wedge, right? Because if you redraw this using the weak lows, you can view this as a descending wedge. So a break higher from this wedge there is bullish. But still, you need to be nimble here. So I see the potential for a long trade. There's no question about it. We had double confluences, triple confluences holding. But if I were you and you're looking to be long, I would be probably scaling in this trade. Scaling in more the more confirmation I get. Okay, quite an interesting chart, though, I have to tell you.
All right, Steve, you left me absolutely no currency pairs to cover. None.
Wait, I didn't cover the Kiwi CAD.
No, I'm gonna do yeah, Netscape and Broadcom, and I'm gonna do all sorts of fun stuff today. Just kidding. How's it going?
Bitcoin is the Netscape of this decade.
Well, Bitcoin is, it's out of control. We were having a little bit of a discussion in our chat room about Bitcoin today, as it's, nearing 10,000, which it looks like we're going to hit today. By
the way, only viewing this chart, it now is literally, Blake, vertical. Sorry for literally vertical, right?
Yeah, it's at the point, Chi was asking, he's like, how can traders be buying at this level? It's not traders, it's everybody. It's everybody with extreme FOMO. Like, I think, Bitcoin's going to 100,000 over the next 10 years, so I've got to own it right now. And it may, who knows where the top is, but it is in obviously a parabolic state and a mania state. But, when you're in this state, in the market, you don't know where the highs are, and it's anybody's guess. But that's the mode that we're in, is, you know, people that don't know anything about it are buying it, and you know it. And like I said, I think it can go higher. Now, the question is, can it go higher over time, or is it going to go higher from here? I mean, I'm not willing to put money on the fact that it's going higher from here in the near term. But
I wonder what Netscape looked like in late '99.
oh, I mean, you could pull up any internet stock. It looked exactly like this. I mean, and there's going to be a day of reckoning. I don't know if that's today, tomorrow, 6 months from now, 2 years from now. I don't. But when there is, you will all know it, and we'll go, oh, that was it. You know, 2 weeks after the fact, we'll all look back and go, thank God I didn't buy it there. But we don't know if that, thank God I didn't buy it at 10,000. Thank God I didn't buy it at 25,000. Thank God I didn't buy it at 100,000. We don't know where that price is going to be. But when there is that day of reckoning, we will know after the fact. And that's the unfortunate thing about these types of moves. And yeah, Steve, we're parabolic, but I've seen parabolic before, and it's hard to say if we're in the, you know, it's if we're in the beginning or the end of it, or, you know, we don't know. But Bitcoin has gone parabolic, and I guess we could always discuss.
Maybe it ends like the Nikkei ended. I mean, you know, you weren't late if you waited for a key reversal day like Steve did to be short. So maybe there will be a signal, so that you don't have to anticipate it. You just wait for it to do something wrong, and it hasn't.
Well, yeah, and it hasn't. We don't know where that's going to be, and it's you know who's going to be on today. We're going to have Greg Horvat. He's going to be here today, and maybe he has a little bit insight. I think, you know, Ellioticians in these types of environments can see a little bit more than like that I can see when we're talking fibs and extensions.
Yeah. I think it's a
1.618
extension.
Since you mentioned it, Blake, Greg did cover in the next week's preview video that we issue every Sunday, Bitcoin, and if I remember right, he was looking for a move to roughly 10,000, which is exactly where we are at the moment, before a bigger pullback. So here we are.
Yeah, here we are, but it's not pulling back. It's not. I mean, here we are. I said the same thing about, oh, here we are at 7,000. Oh, here we are at 5,000. Oh, here we are. You know, it's where we're at right now, but I don't see any signs of a reversal at all. And you know, it's great if you own it, and if you don't, you just, you know, if you're like me, we just sit and wait. I will own Bitcoin at some point, and it's not here. So, and it may be.
You have a price in mind, Blake.
Huh?
Where do you think you'll be able to buy it after the year is taken out?
There is no way for me to guess. It would be a wild guess. You know, no, there's no. I mean, if you know, just eyeballing the chart, I mean, I would think, you know, whenever we peak, we're probably going to lose half of our value.
Okay.
So you know, whether we peak here at 10,000 or we peak at, you know, 25,000, I think at some point it will lose half of its value relatively quick and then go into a lull. And whenever it goes into a lull where, you know, no one's interested in Bitcoin anymore, and you know, it's kind of like it's not talked about on a daily basis, and you know, everybody kind of forgets about it. That's when I'm going to be buying it. So, you know, like let's say it peaked today and it dropped to 5,000 in the next month. Let's just say, I'm just, you know, throwing that out there. I'd probably be a buyer, you know, 6 months from now, after it's, you know, no one's looking at it anymore, and everybody, you know, all the negative comments come out, and you know, it's not a focus. Once it's not a focus and everybody's kind of past it and it's leveled out, that'll be the next time that'll be when I'm a buyer. And like I said, I don't know if that's 6 months from now, or or a year from now, or 2 years from now. But that's the point. I'm going to be a buyer when no one's looking, and because right now it's in everybody's crosshairs, and it's in everybody. It's I have to believe that we are in. It's very similar to like the internet service providers, the ISPs. If you remember. The AOLs, the MindSprings, the Googles, or not the Googles, the Earthlinks, it's the mechanism, and I believe that this is a technology that's going to be adopted over time, just like the internet was. But you have to let the weak ones get shaken out and it come crumbling down. And like I said, I don't know if that's today or a year from now or 2 years from now. I have no idea. So, but looking at the chart that Steve had up and the chart that I'm looking at in front of me, it's obviously parabolic, and but who knows where it can stop? Who knows? So Steve, you didn't look at the New Zealand Canadian. Is that the only pair you left for me today?
Maybe he walked away. Yeah, I think he did talk about Euro Kiwi.
Yeah, well, since he already turned his mic off, he might have stepped away to run to the restroom.
Oh yeah, I was speaking to myself actually. I realized.
How are you?
How you feeling, Steve? You feeling better?
Yeah, except some like morning sickness, like I'm pregnant. Yeah.
Oh wow! So you're pregnant. So what are you gonna call your new baby?
A wonder. MacGyver. Actually, MacGyver. Now that I think about it.
MacGyver. Okay. Well, I was gonna say you haven't looked at much, or I mean you looked at a lot of stuff, but I will say that the euro dollar. We talked about the euro dollar yesterday. Well, if you use ForexAnalytix, there's I made a very conscious effort yesterday at pointing out all of the pairs that would possibly reverse with dollar strength yesterday. So we talked about it yesterday. We got some dollar strength. We got the euro reversed from the 161% extension. You can see the 4-hour chart. Yesterday, the intraday update, the euro dollar is within pips of the yesterday. Intraday update, big reverse with the 161% extension. RSI on the 4-hour is very overbought. Caution longs also could set up for a counter trend short intraday with good risk reward. That was yesterday, and we were trading around 119.30 something, and we've come off. Now the question is, Steve, and I heard you talking about the euro dollar, is what do you do with it now? Because I'm not bearish. Actually, I'm more bullish than anything the euro, but I don't know if this is the right time to be a buyer, or if we're going to have a little bit more of a setback in the euro. Personally, I still feel that there's going to be some more dollar strength coming before I can be a seller of the dollar again. So and I believe that not just through the euro, but also looking at the pound. I did short the pound yesterday. I took profits off the table yesterday, then I shorted it again overnight.
Good trade selection, Blake, between the two. Very good.
Thank you. Well, here's the thing about the pound.
You literally top picked the pound. That's true, literally.
Yeah. Well, thank you. It was we talked about it here yesterday. So even if you're not a ForexAnalytix subscriber, you would have known about this. Okay.
Which, by the way, since you mentioned it, sorry to interrupt, it's a good opportunity to remind them that they have around a couple of hours left for the Cyber Monday offer.
Yeah,
so it's a good opportunity for them to take advantage of that if they want to become.
Yeah, we extended it out just a few hours from yesterday because we started it in Europe yesterday, so we wanted to make sure the North American traders had a good 24 hours to take advantage of it. So yes, that offer will expire in like 2 hours from right now. So but even if you weren't a ForexAnalytix subscriber, we talked about the pound yesterday, and the reason why is because we were up against triangle resistance. Now we all know that if the pound dollar breaks through 134.50, it's gone. I mean, I'm very well aware of if we break through here, we're probably going above 140 in all actuality, and I'm very well aware of that, even though I'm short, because I know that it's manageable risk from here, being on the short side, knowing that, hey, if we're at let's just say it's at 133, and I know we're below that now, but if we're at 133 and you're risking a 134, you're risking one, you know, again, and I'm just rehashing what we talked about yesterday. Your risk is here, right? And your reward is somewhere down here. So you're still risking, you know, one to make two, and I'll take that trade anytime. And it's actually more like 1 to 2.5, 1 to 3. Now I picked up the U.S. dollar Mexican peso yesterday. I'm a little under the water. Well, actually, me personally, I'm about flat right now. But this the U.S. dollar Mexican peso hit a 50% or close to a 50% retracement. It was way oversold, divergent RSI. We came out of a descending wedge, and right now we have a inverted head and shoulder pattern setting up. So you can see it right here, and you can, you know, even if you bought it right now, you're going to get a better price than I have, because the way I'm looking at it is, again, risk reward. Risk is below 1840. Reward is somewhere up here, somewhere in this vicinity, right? So at current prices, you're risking one to make maybe three, maybe more. So I still see a good risk reward, and that's everything that we do. Everything that we do in the markets is all about risk reward. Look, I'm out of the money right now slightly in the US dollar Mexican peso. I can lose money in either one of my trades that I have going on right now. It doesn't, well, it does matter, but it doesn't really matter on a longer term horizon, as long as I'm always got a decent risk reward set up for my trades. I know I'm going to be wrong. I know that. And if you ever approach the markets thinking I'm always right, I'm always going to be right, or I'm going to be right 70% of the time, that's, you might be. I mean, it's possible, but chances are you're going to be lucky if you're right half the time, maybe even less than that. You know, especially depending on your chart reading skills, your, you know, the way you disseminate through all the macro currents out there. Your chances of you being right, you know, half the time are probably about average, but as long as you have a good risk reward whenever you approach the market, you know, hopefully you'll come up ahead, you know, if you practice sound risk management. You hear this from traders, and you hear this from market participants since the beginning of time. It's all about risk management, because you are going to be wrong. I'm wrong. You know, and I know I'm going to be wrong a lot as well. It's not like you know, oh, I'm very rarely wrong. No, you're going to be wrong, but you got to know where you have to get out. And you know, as Steve and Dale, because I know both of you guys are here, and actually I just saw Greg popped in, and before I let him you know, take over. It's interesting. I talk to traders, or we talk to traders all the time about, you know, they may chase other traders' trades. They might see traders that they like or they respect and say, oh, I'm going to get in. I'm going to get in here because so-and-so is getting in here to whatever they're buying or selling. Hey, that's fine, but you have to be able to look at the charts yourself and say, okay, I'm going to buy XYZ here. Where am I wrong? Because that is the first question you should be asking yourself each and every time. Where am I wrong? If I buy, like, for example, I'm just using the US dollar Mexican peso because it's right here, and this is an example of something I did yesterday. Okay, I'm buying the US dollar Mexican peso here, and this is about where I own it, right about where we're at right now. Where am I wrong? I know for sure that I'm wrong if we get down here. And that's where my stop is, just to let you guys know. And my take profit is somewhere up here. But I know for a fact that if it goes down here, if it goes this way, I'm going to get out and I'm going to take a loss. But what a lot of traders have a difficult time doing is accepting the fact that they're wrong and taking that loss and just getting out. I never have that problem. I am not, and this is, 22 plus years of trading, or 22 years of trading this year. I've never approached the market with the assumption that I'm going to, try to, really try to make this trade work. If it's not working, it's not working. I get out and I'm man enough to take my loss. And you have to know exactly where your exit point is before you enter. Period. End of story. That's not an up for discussion type of situation. Whenever you enter the market, you should know where you're going to exit for a loss. Now, where you're going to make money and where you're going to profit, that should be an open target, in my opinion. I'm like for example, I'm hoping we get to here in the US dollar Mexican peso, but if we only reach here and then something happens where I have to get out, I'm going to take profits off the table. Whether it's a correlation or whether it's a headline or whether it's economic data or whether it's, the dollar turns against everything, I'm going to get out and I'm going to take my profits early. But I know for a fact, if it gets below here, I'm out. Okay, that's my little training for today. Now, I hear Grega. Grega, how you doing?
Hey man, I'm fine. Just
hey, I was just going. Thank you very much. I was just going to say, great video this weekend. If you guys didn't have an opportunity to listen to Grega, his week ahead video, I think it was awesome.
And it's still relevant.
It is. Yeah, it is. And I know you were talking about being bullish here. I'm bullish here. I think we're in the middle of a correction, and I want to let you discuss that. But I also just wanted to tell everybody it was a great video. Thank you for doing it, because it's a great change up to what most listeners are accustomed to hearing every Sunday. So thank you very much.
Sure. I like doing them so.
Yeah, and I like that you showed the ForexAnalytix coffee mug. That was awesome.
Yes, maybe we should make some promotions and some offerings regarding those. The same like we did for T-shirts.
I think we should. And actually, you know what we'll do, Grega and Steve and Dale is and Stelios, if he's listening, or whoever else is listening. I think what we'll do is we'll do some sort of special stuff at the very end of the year, and we'll do because I've got a lot of product that I'd love to give you guys, the listeners. So I think that'll be a great idea. So with that being said, we were just talking about Bitcoin and how it's reaching 10,000. Do you have a view on Bitcoin, on what you think?
Actually, you have to be bullish.
Well, yeah, okay, I got that.
Any other view? I don't know. Yes, well, I have the wave counts for sure, but still, I'm looking at these markets. It's just really crazy. I definitely did not imagine this will happen. Maybe even 3 months back. So it's a real, I don't know how to explain. Maybe it's going to really to 50,000, who knows, but what really we need to be aware is that there will be corrections for 30% or even 40%, because after all, it occurred 25%, 2 weeks back. So,
right.
So going in this Bitcoin here, it's very dangerous. What traders should really be aware of is that they can lose a lot of money if they go in at higher prices. So
yeah, right. So buying dips is obviously going to be the weapon of choice if you're going long. And it's just the question is where it pulls back and how deep are these pullbacks that we get.
Yes, but it's really hard to get into these pullbacks, because those corrections are very sharp and they cause a lot of fear. So it's really, really hard for me personally as well to get into this market when it's falling so sharply. We have seen very sharp correction back in at the start of November, 2 weeks back, very strong drop. I definitely thought that we have picked up here and that we are going much lower, but you see it where it is now.
Yeah, I mean it's almost doubled. It's up like 80% from when it bottomed a couple weeks back, which is just crazy. And, hey, really quick, I know Dale, you have an interview today, right?
Yes, sir.
Okay, hey, Greg, I want to pass it over to you because I know there's a couple things you wanted to talk about, so I'm going to make you presenter. I'm going to keep my mic on so to listen and chat with you, but I'm going to pass it over to you in case there's something you wanted to show for the next 5 or 7 minutes before Dale brings on his guest.
Yeah, sure. So actually, what I'm looking at is, as you said yourself, as Blake said, I'm also bullish here on euro dollar, and it's very interesting because we have turned lower from this September 24 gap. It was actually a very small gap, but still it was filled yesterday and we reversed lower from it. And normally this is exactly what will normally happen when gaps are filled. Okay, so this was some very important point here, but I think that we could now just easily stay sideways or correction in a corrective pose. What I'm also looking at is this swing high from 1.1880, its potential support from where a new leg to the upside could occur. What is really interesting is that on a 1 hour chart, we have 3 waves to the downside for now. So ideally, that's a correction that will take us higher, but it may take some time. I definitely do not want to add any longs. We are long PIP from last week, and I will still remain it. But if we'll see some kind of a personality of a corrective movement, which means if we'll see very slow moves overlapping price action, then I may even consider to add to my longs. But at this stage, I think it's better to wait, okay, with any new positions. But clearly, if this pair is bullish, as long as we are trading above this channel support line, and on a daily chart, ideally we will continue higher into wave 5, and then we'll look for very important dollar turn. Okay, so for now I think that there is still too much risk to be long the US dollar. Also, we said that dollar, when this euro dollar rally will continue, that commodity currencies could recover, and I think that we have some very interesting price action. We have seen on Aussie dollar nice turn to the upside after this divergence, and also after this ending diagonal here. So I think that we are set up to going even higher, and ideally here on 1 hour chart we are approaching to the base of wave B. So I think that we could see higher prices later this week. Also, we turned up from this trend line support. It's actually extended triangle line. Okay, so I think it's very important here to pay attention on it. Also, we bounced from this swing low, so I think that we could easily continue much higher here on Aussie dollar. Okay, also there's always, as I said, also in week ahead video, there's always good to be prepared on different scenarios, because we are also traders, not just analysts. So I'm still observing bearish pattern on cable. Actually, if you take a look at this price action, it was a very strong drop from September and for the start of October, and then we just went sideways. Okay, so this side, yes.
I was going to say, hey, Greg, if you're now, I'm bearish the cable. I actually sold it yesterday.
Yes,
but I'm also bullish the euro. I mean, we could also play the euro pound to the long side too. That would be another alternative. But okay, go ahead.
Yes, actually, I can take a look at the euro pound as well. So actually, I'm still only holding trades on the long side of euro, not on pound yet. But if something changes, if euro dollar drops through that support that I highlighted earlier, maybe even in impulsive fashion, then this will be just my even stronger evidence that probably cable should be the one to look for new trades, obviously on the short side. Okay, so but for now it's a little bit too early for me to look for any trades on cable. We don't have enough of evidence as the top has been put in place, but there was a nice downside reaction today after this head and shoulder stop. and potential completion of an ending diagonal here in wave C. But if you're familiar with the Elliott wave theory, then you know that you need 5 waves from the highs before you can confirm a change in trend, okay? Because this is an impulse and you want to trade in the direction of an impulsive structures. So if I label this real quick, let's assume this is wave 1, wave 2, you need to see wave 3, wave 4, and wave 5, okay? So there's still way long to still some more downside before we may even confirm a top in place, okay? You need to see 5-wave drop. Ideally, as I wrote it here, only if we cross this wave 4 swing low, then I will probably consider shorts on a pullback, okay? But firstly, obviously, we need 5 waves to the downside, because in such case, that would be a very strong indication that cable has stopped, and we could easily make a very good risk-reward trade. Because if you go in here and short cable right now, the risk-reward trade would not be so good, because you never know how complex this wave 2 will unfold. We can even retest 61.8%, okay, which is ideal fifth zone for completion of second waves. So in such case, your stop loss should be much, much higher. But once we will have 5-wave drop from the highs, then you clearly know where is invalidation point and where my stop loss should be placed and where my entry should be, probably on a pullback, okay? But this will come in play only, as I said, if we see more weakness here and potentially euro dollar, if it falls to the downside. As I said, this would be very strong confirmation that I should switch to, at least temporarily, to dollar longs, okay? So that's it for me. I think we have a new interview.
Thanks, Grega.
Thank you, Grega.
No problem.
Thank you for clarifying. So after listening to Grega, forget Euro Aussie. Probably the better trades cable against the commodity currencies for shorts anyway. So we do have a great interview today, guys. In fact, someone from my generation, Fabrizio Billy, is with us. And Fabrizio, thank you for your patience. And I'm going to make you the presenter. Looking forward to hearing your voice and seeing your screen. Welcome to FACE.
Hello.
Hi, Fabrizio.
Can you hear me?
I can hear you fine.
Okay,
Nice
Dale.
to meet you.
Nice
All
to
right,
meet
great
you, Dale.
Thank you very much. Great to meet you. Thank you for taking time out of your day. And we had a little chat this morning talking about some war stories. So we're pretty much from the same trading generation, where we used to update our charts by hand. And my gosh, you were there for the '87 crash, and you brought up firms like Solomon Brothers and the RJR deal. But why don't we start even a little further back? And you may want to go to your screen share when you want. I know there's a few instruments you want to cover. You're Italian, but you grew up in the U.S. Where did you grow up, Fabrizio?
Well, if you can hear me well, because sometimes there is some problem, some lag problem. Is that all okay?
Yeah, we can hear you fine.
Very good. I'm happy for that. So very simply, I moved to US and I grown up in US, and I own everything to the United States, and I grown up there. Very simply, I've been in different business, but always very much linked to all the financial and to the exchanges. And my first trade, just to say, I'm 61 in few months. So let's say that I'm not the best one around, but actually the only point is that I've seen everything, and that means something. That's experience, you know, and that makes you. Let me say, I grown up in US, and as I said today, I'm Italian, so I'm kind of a talky guy. You know, I'm sorry, stop me, Dale, if I exceed.
No, go ahead.
So very simple as that. Few things just to make the whole contribution a little bit more, not be doing more. It's been very interesting. I've been listening to you gentlemen, and you are very, very skilled and I agree with you. Besides that, one of the main things is the first trade that I made, the first deal that I made was in 1980 April. Since I was a kid, actually, 22 or 23 years old. So at the first IPO, since I knew Mr. Drexler in Gap, the first IPO was in Gap in San Francisco, and everything passed through in 1987, Monday 19th, Black Monday, I was in the Salomon Brothers floor in Victoria Station, and I've been part of that absolutely incredible moment. It's a goosebumps moment, actually, and that was a real thing. It was a real thing. Just to make a long story short, and everything, I'm trading. I have different lives, so I've been an entrepreneur. I'm taking care about M&As and etc. I started as a fundamentalist, so very, very much fundamentalist. So after a certain moment, after the finance changes in 1987, after the Black Monday, I started being puzzled and very much interested to technical analysis. But I consider just a tool, one of the tools, most important tools that we can use together, coupled with all the other tools that we have available, which are fundamental and all the other topics that we have to cover when we take a look at the movement of a name or whatever, or a derivative, etc., etc. I'm 80% of derivatives, and the rest is on stocks. So said, I don't want to be boring at all. If Dale allows me, I would like to just add. You said already everything on pairs, on FX, on CCY. So, but one thing that I've been watching in 3 weeks ago was.
Yeah, we're not seeing your screen yet, Fabrizio. Okay. So you need to share your screen.
You don't see my screen. Okay, let me see now.
Screen share function.
Is it okay? Can you see it?
Not yet.
Not yet.
There we go.
There you are. Okay, got it. Now let me reduce this one. Okay, let's reduce this one. Otherwise,
all right, so we're looking at Treasuries and Dixie.
Okay, can you see it in full?
Yes.
Okay, so this is a very interesting thing. Let's call it, to make a long story short again, there is a strange and strong divergence, let's call it a spread, between the UST 10 years benchmark. You can find it even on the 2 years and even on the 4 weeks federal funds. Divergence between the yield, the orange one in shade is the yield of the UST, and the magenta one is the DXY.
Okay.
As you see, there is a strong divergence, and that puzzled me because generally speaking, there is a mean reverting. Generally speaking, there is of course there is some divergences, and then mean reverting action, and the all things coupled together. And in this moment, again, to make a long story short, I see a much too spread divergence, especially in front of what the outlook. Yeah, in front of the outlook that we have, which is a 92% props probabilities of a hike from Fed in December of 25 basis points.
Let me ask you, Fabrizio, is mean reversion part of quantitative analysis that you said you do quant? Okay, go ahead.
Absolutely. So generally speaking, if I don't bore anybody, generally speaking, the two names, the two assets, or however you want to call them, they generally speaking diverge and they converge. So that's it's generally speaking a pair trading or a convergence trade. So in this case, as you can see now, let me show a little bit more. As you can see, the price action of the UST yield, of course, talking about yield of the UST or the benchmark 10 years, it's always almost very much close to the price of DXY, and sometimes they diverge, but then the mean reverting action comes in. At this very moment, with the outlook that we have, the economic outlook and monetary policy action outlook we have, there is a very strong and strange divergence and spread. So 3 weeks ago, I've been watching carefully this one, and I said, what the hell? It's something gonna change. So very likely the mean reverting, there is a number of tools that I have through my platform, through Icon, which is the Thomson Reuters Icons, which is the brother of BBG, Bloomberg, and I can calculate everything, the weight of the different of the pair trading, etc., etc. But that's not the point. So I said, let's try a different trade. So I started with a strength on DXY, even if it was against the outlook, because if we're going to, and that would be 92% props probabilities in December. So even if it's against, something could happen. And very simply, it gave a very small yield 2 weeks ago, Friday or 2 weeks ago, or 2 or 3 weeks ago, and then actually diverged completely. So that was my first driver in terms of how to understand starting from the to the USD yield. But then,
so is your best guess that the dollar catches up with yields climbing, or
correct,
that yields drop to reflect the weakness in the dollar?
Exactly the contrary. So this wasn't a pair trade per se. So I took this configuration in order to see that there was something, there was a strange divergence. So I suppose I didn't make a pair trade that was the correct trade. So to short the yield and to buy the currency, the DXY. So at the very end, my assumption was wrong because it just moved had a certain weakness for, let's say, 2 days, and then started to move a little bit ahead, and then we changed the DXY chart, and that's we're talking about technical analysis against. So right here, as you can see, there was a head and shoulder, and very clear, very nice, a so-called negated Gartley, and what happened is that we've been able to get a very short. We as a fund able to get a very short profit, and then everything reversed. This is DXY, yes. On euro, sorry, that's the DXY. Let me get to euro.
Yeah, they both had head and shoulders formations.
Yeah.
Yes.
This one was very good. This one was good. I got this. All this. I'm sorry for the cluttered chart, but this is an operative one. Okay, I'm really sorry for that. I like to have a clean chart when I.
Yeah, we were commenting on the euro head and shoulders top, the breakdown.
Yeah.
It was taking too long for it to accelerate to the downside. That made us think it was a trap.
Yes, and I did too, because it was negated head and shoulder, because the neckline was negating somehow. But at the very end, all those levels are old. Let's say 2.5 weeks old. So I got this part in short, and then actually I've been obliged to reverse. If I'm not too long, let me explain you one thing. I always try to work covered. So what does it mean? That I have 2 different accounts. So I'm long on one part, and I cover my delta of 25%, 30%, 50%, or completely neutral, 100%. So I expect I'm only gonna pay the if I'm on the 6E, I'm paying nothing because I have no swap. If I'm on the spot, I pay, of course, the swap.
Okay.
Of course, wait. And in that case, I wasn't covered at all. So, as you probably understand, I keep on run the winning, the profiting leg. In this case, was the euro leg, and keep or reduce the losing leg. In this case, was the DXY leg, and I expect the price extraction, as we probably all know, and then at that point I dump the winning leg, and I expect and I wait for the losing leg to reabsorb. In this case, the trade wasn't done in that way, and very simply, euro stop at a very let me get once again, euro DXY moved perfectly at this sensible level here in magenta, and he stayed sideways for a while, moved a little bit higher, and then was last week, and then Tuesday last week exactly, if I remember properly, or Thursday last week, and then came down. At this point was absolutely clear. You gentlemen already said everything. Okay, I'm trying to explain my operativity, if there is any interest in it. And so at this point, once it took away this level, which is of course a sensible level, I was definitely convinced, as far as that I'm convinced of something, but when I enter a trade, I always know that I'm wrong, and I let the market let me know that I'm right. So I always, since 22 years, I always know that I'm wrong, and I let the market let me know that I'm right. So the reason why I'm somehow covered, especially in those markets, not markets that are different now from 20 years ago. So once it took away in this way, in an impulsive way, and with this different formations, I knew that euro was unstoppable. So let's move back to euro. As a matter of fact, euro lie down on the sensible level here. The magenta one here, it's the key point. So once this key point will be taken away, euro will be absolutely, there is no, the downside is completely free. So for euro was a free fall. And actually it's been kept up. There is another point, there is a large number, about a 1.5 billion in expiration on New York CAT expiration in options and FX options here, and that's been defended fiercely by the by institutionals for this level. And this further hint told me that from this point on, passing by all these different levels, euro was unstoppable somehow. So to make a long story short again,
so
those
what about from here, my trading warrior brother?
Say it again. What about from here? From here we're going to 2022.
Okay, 122. So you're
122, which is this level. This one is 122.05.
Okay. And what are those green lines based upon? Any kind of fib levels, or just supply demand zones? How do you come up with these different colors for pivots?
Okay, this one is a key level in which market euro will very much likely, indeed, it's a double top, indeed react. So we'll have a pullback. As much as this one here, which is 78.6 perfectly, and 76 or A, B, C, D, A, B, C, D, perfect. manual. Again, from here to here to here to here. This is my way to operate. Very simple, even if it can look somehow complicated, which is not.
Okay.
So I knew that here, and this is a level in orange, it just felt it, pulled back. Here is another good point, which was another sensible level here. Good point to enter again, buy again the pullback, and maybe load it up even more than before, and cover up my position of about 25%, my delta of a 25% in the XY or another kind of reciprocal. I use the XY, or I use the same spot if I'm on the spot, or I use US dollar CHF for what it could be, because it's the speed between the CAF, the Swiss dollar, the Swiss franc is different. So every one of those are sensible levels, and I canceled everything in order to render not too much to clutter the chart. Are sensible level where this is an objective, this objective has been taken away, this is another objective, this is a sensible level, this is another objective that I'm waiting for, and step by step I get over there. This point is a tough point, is a tough level in which I expect to the euro to come back again a little bit, or to break it up impulsively if everything happens in the way that should be. All the monetary policy speeches, Mr. Governor Draghi and Mrs. Yellen, etc., and then what we're going to see.
How did you come up with 122 and fractions for being a final target or a target for this move in the euro? What methodology did you use to come up with that number?
Fibonacci.
Okay, and that's an extension?
As an extension, it's an AB equals CD, of the different degree, of a higher degree or of a lower degree. It depends. There is different ones, and or very simply could be 1272, which is my key point. I always work on 1272, 1.414. At 161.618 or 707, all those kinds of things that everybody knows, which are with that kind of approach. Final point final objective is again, as I said, 122.05, and this is for the euro. Of course, there is some interesting the mark trend lines that I use very much. That gives me the break up or down to, you see there is some downward and some others upwards, and I know exactly the software gives me exactly the difference, the distance from one top to the level. I don't want to make it too complicated.
Okay, did you say they were Tom DeMark trend lines? Or you marked the Tom DeMark, okay. So
okay, Tom DeMark, yes. Tom DeMark, yes, the TDM, the TDM trend lines, which are, I use them since 2002. Because I started with Larry, with Bryce Gilmore, Tom DeMark, but at the very end, I simplified everything, and I use my approach when we're talking about operativity. We're talking about money. We're not talking about just analysis. And when we make money, we have to enter in the right moment and make the money, period, or not lose the money, which is the rule number one, or to cover our loss with other things. This is very much all. Sometimes I prefer to say where I was wrong, and the point in which I was wrong, my assumption was exactly this one. because here I suppose that it was reverting here, close going to here, and instead I was wrong. So little gain, little loss. Let's say we get even, but at the very end now have the picture is very clear, and excuse me for to be long, why it went up, because there is a certain reasons, certain news, there is a strength in Germany, there is a strength in ACB, there is a large number of reasons. Otherwise, in my very own opinion, but that count zero, zilch, gurnish, zippo, nada, nil, my opinion, because what it counts is what is happening now, not what I can see.
Right, you're right, but I'm also interested in your opinion a little bit more macro. So the big debate is this the beginning of a larger bear market in the dollar, or is this just a bear market rally in euro now that all the parity bears have been buried and the tombstone is up, and then after this rally completes, we have another big wave down in euro and up in the dollar? What do you think?
Dale, very straight answer. At this very point, my opinion is that dollar will sink and euro will fly.
Okay.
Very straight. At this point, 2 weeks ago was completely on the other point on the other side. Let's wait at 13. At the 13, I'm not sure how much this price has been, this level has been already discounted by the market in terms of DXY or in terms of USD, but I took away those levels, in my opinion, my very own opinion. The dollar will sink. I don't know how much. I will, or at least I have my opinion. Okay. But I can say, and I can see the euro is unstoppable in this moment. Unstoppable is a bad word, but I'd say that has a very strong. It's so strong that it's very complicated. Let's see on the 60, which on the 4, sorry. On the 4, it's even sometimes more clear. When we see those kind of configurations at the top, you see, there's not much. I mean, once he arrives,
so a possible scenario is we get to 22, and that ends the wave that began all the way back at 103, and then perhaps we have a big correction from there. But then wave 3 or C begins to the upside. That would be the bullish case, right? So we go from almost rally 20 cents and then maybe pull back 10 and then rally 30 or better. Is that a possibility?
It is absolute. As we see the market with 1, 2, 3, 4, 5, absolutely yes. We could be, and once we get 22, we can be in a major degree 3 finish, and then we get down to a 4, which will be of course a canonic 4 with not overlapping, nothing at all, and then from there on it could be even higher.
Okay.
But
so go ahead.
But there is economic policy. Economic policy, ECB policy that will indeed, let's say, excuse me the word, taint the or manipulate the old structure, the old structure, let's say, because we're working on price structure or movement structure, and this structure is very clear at the moment, and once I will see the beginning of wave 4 corrective, not overextended and not overlapping, that would be good, and that will be the sign that to re-enter into euro and going on.
And that wave 4 could begin after we achieve 122.
In my very own opinion, yes. because that will be the very extended. That should be 1.618 of the major in the major degree, and in that point that would be could be happened even before. Honestly, I don't want to be much too banal or much too elusive in your question, but again, as I said, I trade what I see in this moment, and as I've been experienced in all those years, now currencies, they react in a very different way that they used to do before.
It was such a pleasure to interview a lion-hearted guy that's been around for decades, that's still young at heart and passionate about the market. It inspires me to keep doing my work to help people out. Really glad to have met you, Fabrizio. I don't believe you have any kind of axe to grind. You don't sell a service, and if I'm wrong, correct me.
You're correct. I don't sell anything. I'm a prop trader, and I have a fund, and this is it. It's the only pleasure, as I said, is a passion. That will never end. I will die in front of my screens. That's the point.
I got it. Live or die from what you pull out of the candlestick. So,
yes.
All right, buddy. So you're now my trading warrior brother, and
you're my brother too.
You were before, but I'm making it official now. And
you're my brother either. And I'm honored. I'm honored to be hosted by you. Your gentlemen are very good, and I appreciate, and you're very professional. And I esteem you very much, and you, Dale, very much, very, very much.
All right, Fabrizio. So we'll keep in touch, and understand you even do a little television. So we're kindred spirits on that level as well. Out of Italy, and you can follow Fabrizio on Twitter at Warburg. What's the number? 100.
Warburg 100. Yes.
That's
Warburg,
it.
Warburg 100, which is, as I said, Warburg. It's my old comparison, Warburg Pincus. Yes.
Yeah, I remember it. Okay. Well, thank you for bringing me back way before Lehman Brothers.
Yeah.
Most people you talk to, they can't remember past Lehman Brothers. So, great to talk to a veteran who's humble, and thank you for sharing your views and your journey with us today, buddy. Appreciate it.
Thank you to you, Dale, and to your host and to your people, and it's been a pleasure. I'm honored. Thank you very much.
May pips rain down on you, buddy, for the rest of the year and going forward. Okay.
Okay. Let's stay in touch.
All right. Okay,
Great.
Faith, that's a wrap. Remember, don't just count your pips, count your blessings, and we'll see you tomorrow. See you Wednesday. Good hunting, and you have 1 hour to take advantage of the Cyber Monday special. Adios.
Ciao. Thank you.
Bye-bye. Ciao.